So they have what's called upstream presentment with BNPL, which essentially it's a fancy way of saying instead of you seeing the offer on the checkout page, you're now seeing the offer as soon as you click on a product that you want. And what that does is it raises their share of checkout by 10%. So I think there were two real highlights that I would take from the PayPal earnings review. One of which was Honey, which is several $billion acquisition they made in deal discovery a few years ago, and the integration of Honey into the digital wallet is it's 7xing their deal discoverability versus the old upgrade. It's significantly raising ARPU, or they call it our active revenue per account, not active revenue per user, so ARPA, and it's significantly lowering churn. This ability to move up from checkout to deal discovery and now all the way to the entrance of a site page. Really what it does is it all works to augment PayPal checkout. Like that is the bread and butter of the company. That is what they're trying to support. But as you move higher and higher up, as that PayPal button or as that Honey button moves further and further up, they get a larger portion of that checkout share, which they get a lot of operating leverage out of their fixed cost base if they can just use checkout share, which is what they're trying to do. And the other real project that they're working on, which has been very successful, buy now, pay later. And the way PayPal approaches BNPL is why I like it so much. They don't charge merchants anything for it. They assume all of the balance sheet risk on themselves. And so essentially merchants get this free placement or free opt-in that PayPal can provide, and they just charge their standard take rate. So why that's so important is, again, moving up further in the checkout process. So BNPL is a fine product and they're having a lot of growth there. And it's been a very successful organic product launch, which is important for them because it shows that they just don't need to buy everything that they want to be involved in. They can internally develop, which is very important. But again, what it does, it's the same theme of moving further up the checkout flow. So they have what's called upstream presentment with BNPL, which essentially it's a fancy way of saying instead of you seeing the offer on the checkout page, you're now seeing the offer as soon as you click on a product that you want. And what that does is it raises their share of checkout by 10%. That's all PayPal needs. They don't need to charge merchants for anything like some of these other players do. They don't need to charge late fees to consumers or hefty interest rates like some of these other players do. All they need is the heftier checkout there. Those two things are going very well and growing rapidly for the company. And those are two highlights that I was very encouraged by.